Thanks for joining us. First tonight, for anyone who's got their money in the stock market, and because of super schemes, that's most of us, these are indeed nervous times. Our market today continued its slide and is now below what it was 2 years ago. The United States has received a stern warning from China to end its debt obsession, in their words, or face the financial consequences. China may be America's biggest creditor, but the entire world is affected by the fall of this financial superpower, which at the weekend suffered a psychological blow when its credit rating was downgraded, and that nudges it out of the ranks of the world's most bankable economies. Here's Eddie Meyer.
America downgraded. For the first time in history, the US is stripped of its top credit rating.
The U.S. economy is once again in the crosshairs, a downgrade of America's debt by a ratings agency.
Billions more wiped off the markets. In the week, the world stared into the abyss of recession again.
It was flagged, expected, but is historic nonetheless. For the first time, the US has had its credit rating downgraded, just one notch from AAA to AA+, enough, though, to send shudders across the globe.
I think this might be a real wake-up call for Congress because, you know, the effectively Standard & Poor's have given them a fail mark on their attempts to get their budget deficit under control.
But already many are saying it's not as bad as it seems. The US is seen as the global safe haven, and the downgrade came from just one of three ratings agencies, Standard & Poor's.
It's probably significant in the symbolic sense, but if you look at the financial markets, you know, the US government can still borrow money at under 2.5%. I think many Australians would be happy to borrow money at that interest rate.
The US president returned from a short break facing a three-pronged nightmare in trying to overcome the criticisms levelled by the ratings agency.
First, the Tea Party says they're irrational. They threw the steering wheel out the window last week in the debt negotiations. Second, the US economy is on life support. Unemployment is above 9%. Housing prices are flat and American consumers aren't spending any money. And third, Barack Obama essentially fired all his bullets against the financial crisis 2 years ago. He's got nothing left in his arsenal.
So what could it mean? The US economy produces around $15 trillion a year, but it has $14 trillion in debt. The best guess is that this downgrade will mean $75 billion a year extra in interest. The former chairman of the US Federal Reserve, Alan Greenspan, isn't sure recovery will be easy. He says the downgrade has hit a nerve, a sign that something bad is going on.
Considering the momentum in which the market went down over the last week, it is very unlikely, if history is any guide, that this isn't going to take a while to bottom out. So the initial reaction, in my judgment, is going to be negative.
If the US were to go back into recession, for example, then that might be sufficient to cause weakness in China. That would come back to Australia through lower commodity prices and also potentially lower commodity volumes.
Panic is continuing. Another $17 billion wiped off the Australian share market today, sending it to a 25-month low. On Asian markets too, fear overcame greed. Few are buying. None of this will be helped by US lawmakers still bickering, prompting another warning that this may not be the last downgrade.
If the fiscal position of the United States deteriorates further, or if the political gridlock becomes more entrenched, then that could lead to a downgrade. The outlook indicates at least a 1 in 3 chance of a downgrade over that period.
So the big question, could we see a global financial crisis Mark II? Well, economists certainly believe that's still a very real possibility. With so many economies on a knife's edge, fear in global markets would make it difficult to pull back from the brink should there be an unexpected event like the collapse of another major bank.
European officials have also been holding crisis conference calls over the weekend, trying to avoid further financial turmoil when their markets open. Shoring up the crumbling economies of Spain and Italy is now a key priority in heading off a mounting debt crisis.